Hey, how are we doing, everyone? Welcome. For those of you that are surprised to hear Doug's voice, we did send out an email covering for Jim tonight. He's enjoying his vacation out in sunny California, I believe. Don't quote me on that. So how is everyone doing? If you could do the whole why thing. Hey, Lou, Dougie, he says. You can hear, you can see, all that good stuff. Tommy, how we doing? Sandy? Tim? Good to see you. Hey, Mike. And, of course, Lou. All right. Seems we might have a low energy night tonight. We only got 33 coming in. Hopefully some stragglers pop in. Hey, Aaron. How we doing? All right, so let's get this party started. We got enough people saying that they can hear and see me, and that's enough. So I'm just going to pop these questions over here. And, of course, you know the standard disclaimer that nothing presented in this webinar presentation, vocally or visually, is to be taken as trading advice. Everything in here is for educational purposes only. Okay? Keep in mind you should always consult your broker or financial advisor before placing any trade, but hopefully you are consulting your homework first and foremost. And please recognize that trading does involve the risk of loss of all or part of your trading account, and never trade with money you cannot afford to lose. Okay, with that being said, let's get going. Whoops. Continuation of the previous presentation where we discussed how to hold the trades, when to fold them, and I had a couple questions come in, so we're going to address those. We're going to look at some chart examples to figure out how we would have handled different scenarios. Someone's got their hand up. That's it, Lou. Yeah. Okay. Oh, yeah. When to actually get out. Sometimes you forget the order of your slides, right? We've all seen it happen. All right, so I'm gonna do a quick recap. So don't anybody panic who already saw this. I know some people haven't watched the first one, so we're going to give you a quick recap so you're not absolutely clueless on what I'm talking about with the charts. So one of the questions that came in, there was some concern about the, I had mentioned that in one of the kind of hard, fast rules that you can apply to your charts as to when to get out could be use the 513 cross in conjunction with divergence. Okay, that combination, it's the synergy of having the two things that tells you to get out, as opposed to, well, if it closes over the 13, or if it closes over the 5, or the 5 first crosses the 13, because a lot of those will happen intermittently throughout the trend, throughout the run. So that's why a lot of times I would like to look for the 13 cross the actual divergence. So it's like this double punch of like, okay, yeah, here I should get out. But there's a couple additional things that I want to talk about in regards to that, because sometimes I dismiss it. So in covering the disciplines that I'd like to think about in regard, or the things that you have to consider in regards to closing out, are the technical, the mental or the emotional, and the behavioral. And real quick, just going to touch on all of them again. Okay, the technical, your areas of interest, your trapped volume, your price points, your TDI, okay, the first sign of divergence, like true divergence, okay, but there should be a little asterisk here, and we'll talk about that when we're actually looking at the charts. And, you know, another one that used to be thrown around, well, not thrown around, but, you know, a solid approach was the second close over the signal line, where it goes outside the bands, comes back in, then back outside the bands. But you know, I know some people, they can't do that. It's back inside the bands and they're out. But also method-based parameters, like, you know, 2.5 to 3 times ADR. When you see visually 3 levels, these are all things that I think you should consider. Okay, because keep in mind that when you're swing trading, it's more of a mental game in regard to really getting in at the proper point and then looking at everything that you've hopefully studied and that we've talked about here and evaluating the situation. Do I think it's going to go to that quarter point? Do I think it's less likely to go to that quarter point? Or is there trapped volume in the way? Is it going back to the safety zone that occurred 2 weeks ago? That kind of thing. So there is a thought process. If you don't want a thought process, seriously, just use the 513 with divergence. But behavioral, that is like the phase-based. You know, thinking differently when you're in range-bound as opposed to trending. Okay. Now the 513 cross in conjunction with the divergence is really going to help you out with some of the trending stuff, okay? Whereas in your range bound, you're probably going to be better off looking at some of the more technical aspects, such as, okay, over there to the left from last week, that was last week's low. It was at the quarter point. We're headed back down in that area. Let me get out there instead of waiting. Because a lot of times you'll find out that with the 513 cross plus divergence in a range-bound setting, you might actually get out at the same spot you would have if you just use a hard target, a hard technical target, but it happens 2 or 3 days later. And basically you just sat through all that and now you're paying swap. But also behavior as far as actual price action, slow versus fast, okay, because there's going to be times where you get that 513 cross and it's not really level 3 behavior. It's that kind of small crap that we see where we're like, it's up 3 times ADR, but it winds up continuing 2 days later for another, it resets, but it doesn't really have that reset behavior other than just that tight, narrow range on the 1 hour where it's like, 30 pips for 3 days and then it just heads up, up, up. So that comes from, chart experience and watching the behavior on the chart and going through bar by bar and doing your hard right edge stuff that we talk about, but also how they're handling that volume to the left. And specifically, that's more in regard to, the range bound. Now, the mental, this is your game. This is you, knowing the method, the core, having that deeper understanding, because here's the thing, nothing any of us tell you is going to be worth anything if you haven't experienced it and studied it on the hard right edge, doing your flashcards, going through and marking up the levels and marking your entries. Even this slide here even applies if you're doing, the 15-minute, just purely 15-minute, 30 pip. Like there's only so many rules someone can tell you before you have to make that entry and rely on yourself and be confident in what you see. You're not going to have the confidence as soon as it starts doing something a little funny, right? It starts pulling back and, is it going to close over the 13? Let me get out now. And then, of course, the last 20 seconds, what happens? It doesn't close over the 13 and the next candle drops or rises depending on your direction. So you got to have that confidence, especially in your peak identification. Why? What's one of those little quiz questions I always give? I typically always give. I didn't do that tonight. I should get back on the ball with that. Okay? Well, what's the entire method? The way to be profitable in this business, according to the method, in one sentence: identify the peak, trade away from it for 2 to 3 days. So if you don't have that confidence in your peak, well, then all of a sudden holding for a couple of days isn't really going to be in your bag of tricks. But more so, it's the acceptance of when you take that risk, you acknowledge it as a potential loss immediately. And as I said last presentation and other times, Mark Douglas talks about trading in the zone. All right? So basically, you have to be willing to lose on that position. And you also accept that you don't know. You don't know. There's probabilities, but you don't know. So you acknowledge that potential profit also is not the same as realized profit. And that's what gets us hung up. We watch it doing something tricky. I don't care if it's a 15-minute entry and it's 5 pips away from your 30 pips or 5 pips away from your 40 pips. We see it doing something a little tricky, and everything goes out the window and we have to close because, when we should be hopeful, we get fearful, and when we should be fearful, we get hopeful. That's why people hold on to their losers, right? So your brain starts treating that positivity in your current trade. For example, how many of you, hands up, I want to see some hands, how many of you get into a trade and what do? You sit there watching your terminal, your trade balance, right? You watch every little tick. Oh, I'm up, oh, I'm down, I'm up, oh, I'm down, okay? That's not, well, yeah. Someone's saying watch the dollars evaporate. Right, but you have to realize that the dollars evaporating, especially when you're swinging, that's going to be a huge part of it. It's going to evaporate, but you have to start to get in your head the distinguishing factor of paper profits is not actualized profits, and you have to acknowledge that next part, that the pullbacks are part of the market, and it's going to be part of your strategy. Someone's saying on what time frame. I'm talking about the H1. You can apply it to the H4, and really, if you're a 15-minute guy, you can apply the 5 cross and the 13 stuff to that to really hold, because it's an interesting, I'm glad you actually brought this up, because I was just speaking with someone a couple days ago. His name's Jordan. He's kicking butt, and that guy posts with 30 pips. He's going for 30 pips all the time. He's following that. I just sent out an email I think it was this past week about that acronym FOCUS, which has been stated: follow one course until successful. And I kind of turned it around a little bit and said, okay, that's great, but please follow one coach until successful too. And Jim has said this, and Carr said this. I'm not saying anything new, but he decided, hey, I really like Carr's style, so he started following that intensely and doing the homework. And he's banging out 30 pips after 30 pips after 30 pips, one trade after the other, and it's great. But he messaged me and he said, yeah, I'm getting all these 30 pips, but all these ones that I'm taking, they're running 92, they're running 100, they're running 85, so, what can I do? And I said, well, why don't you try cutting off what Jim has said in the past, cut off 80% to start at 30 and let your 20% run until you see that 5 close in the 13 with divergence. That'll help you intraday to max out your move on the intraday on the 15-minute. Okay, so mainly I'm talking about the H1 time frame right now, but you can apply it to the M15 as well. All right, so let's continue and get these questions out of here. Okay, so that's what I was talking about, trade around your position, and that means, if you get the peak, don't get excited and panicky because, well, now, you're up 80 and it's starting to pull back 50 pips, because if it's a solid anchor with all the stuff I talk about, 50 pip, the peak formations, 50 pips above or below a quarter point, you got the second leg harmonic, 2 to 3 days worth of divergence with the baseline bounce, yada, yada, 13 cross to 50. This goes back to the mental aspect of knowing the method. Like, if you see all that, what can you expect to come? Okay, safety trade, level 1 pullback, and this goes back to rearranging your mental game to accept those pullbacks as part of your trading strategy. And if you're already booking some pips based on your various waypoints, you took off 30% at the blueberry and you took off another 20% at the quarter point. Cool, you've already booked, you're at break even. Safety trades come in, you're adding to your position. That kind of mental aspect is what I'm talking about. Reprogramming of what the pullbacks mean to you, from giving it back to new opportunities. But that takes study and experience and confidence in that. All right, so you just got. I need to emphasize this. The single most important thing to keep in mind is that there is no guarantee. There's no surefire, right? But these are the hard, fast ones to consider. One more time before we get into the chart. Only confirmed peak with the multiple confluences in level 3 behavior. And I'm going to mute for a second because I need to take a sip of water. Okay. Book some profits along the way at key areas of interest, the middle of your structure, your major EMAs, the potential zone flip areas, the trap volume, etc., all that stuff. Trade around your position. Look to increase your position at the accepted waypoints, whether it be, just considering AFP, safety trade setups. Carr and Jim talk about those setups and where they occur, like what levels, what to look for. That stuff. So the more you study and do your static homework, your levels, and you really look at each one, dial down to the M15 and look for those setups that Carr talks about, well, then you can be a lot more confident and trade around your position. But we are looking, hopefully, to be getting around these perfect confirmed peaks. Now, hold until you see divergence with the 513 cross. I've obviously already touched on that. We're going to see what that asterisk means there in a second. Or if you have a reversal pattern, an M or W, where price hard above the middle or above the water. Okay, because sometimes that will happen before the 513 even crosses, and you might want to use that to get out. Now, what does that asterisk mean? Because somebody asked me, they said, look, I was doing some of the homework and I was getting out early a lot of the times. They were doing, the bar by bar stuff, and they said, I was missing some of the moves. And it occurred to me that I didn't really discuss one of the finer nuances. And sometimes, things get lost in translation when you've studied something and it's something you see on the chart. For you, it becomes obvious, and you kind of forget to mention. So when I see an anchored, a peak formation that's been anchored, okay, if I took it up towards the top and I'm holding it, I'm not too concerned with the 513 plus divergence that I get in level 1, because once that anchor's locked, those safeties, the move, let's say peak formation high, okay, it drops 75, 80 pips, closes at the extreme of the structure, goes into consolidation. In that consolidation, a lot of times you'll see, say, a W going back towards the high, and that's what's giving you that safety trade. They're making it look like they're going back towards the high, but that initial W will give you some form of divergence a lot of times. And then all of a sudden you get a 513 cross, and you get out, and then you miss the safety trade and the big run down into level 2 and potentially level 3. So that's why we consider everything. That's why I said, the 3 disciplines. And I know people are always looking for that one hard, fast rule. But if you're going to apply the 513 as a hard, fast rule with the divergence, then I would say, don't concern yourself with the level 1 occurrence where this happens. And have to cover this. You're going to get out early. You're going to give money back. You're going to scratch out after 3 days of pay and swap. You're going to miss out at the beginning of a lot of trends, and you're going to miss out on the final portion. Our buddy Larry Livingston says one of the things that anybody can learn is to give up trying to catch the last eighth of the first, and that these are the 2 most expensive eighths in the world. I know there's some 1-minute folks who are like, no, I can do the high and the low all the time. Well, I mean, that's great, but for you swingers, because you're looking for the bigger confirmation that tells you, okay, they have more money trapped, and thus I can hold it, please take that to heart. All right, so let me check the questions before I continue. No additional questions. Okay. That means you're being very clear this week, Doug. All right. And, of course, you're going to be wrong. You're going to be wrong. Don't get upset. It's okay. All right. And I actually have an example that I want to show you. I actually showed it this Sunday of a trade that I took that actually didn't work out, and I made, some errors in judgment. But it's good to show you that, I'm not perfect at this. Sometimes I mess up, and sometimes it doesn't do what you expect it to do. We all get in our own way. And another one of my favorite quotes from Larry there is that the trader has a lot of expensive demons within himself. Okay, to the charts. Before I go to the charts, this is officially the end of the slideshow. Got through that pretty quick. Let's take any questions before we do go to the charts. Anything that wasn't clear, anything you're not on board with right now. Oh, a hard close is where, a nice shift. A nice shift. If you get one of those 5 or 10 pip candles, or where it's just kind of whoop, I'm sorry, I had the phone here, I didn't realize that. If it's just kind of trickling up near the 13 and the 50 and they're getting real close, and you get this one little 5 pip candle that kind of closes on top of the water, I'm not really talking about that. I'm talking about the actual bam, shifts up, closes over the water. That's what I meant. You're very welcome. All right, let's take it to the charts. All right, so I have the one I want to look at right now. Nope. Look at pound New Zealand. When? I'm going to go to September 15th. 2016. Sorry about that. Okay. So what do we see here? Okay, so we have several things in play now, don't we? All right, we're at the quarter point. We've had this big shift up from the previous week. We've moved 3 clear pushes. We go into level 2 and we get just a jut above there, right? Now this, I know, can confuse some people, but my main factor is what's going on here? What do we have here? Whoops. We're going to try that again. Sorry about that. Okay. 115. My apologies. Little technical difficulty, folks. Right, exactly. Trap volume a lot. Now they held long enough to bring that blueberry into the area. All right, again, that moving average tug I was talking about on Sunday. There we go. That's what I was looking for. Let's get rid of all this text over here. All right, so we get multiple hits to the blueberry up into the quarter point. They finally get to break. If you look at exactly where the top of this is, they extended it by like a pipette, pretty much, before they started rolling over and shifting over. Okay, so we finally get a close below the 13. We're in session at this point. Okay, we're not looking at the M15 patterns, but you can pretty much tell in there what's going on. Okay, they're working that high. They've broken the tracer, and now they've shifted down below. Your entry is going to be better on the M15. Don't, Lou, you're on fire tonight. Don't text and drive, he says. Right. Okay, so now we have our confluences. We're with the trend. We're trading with the trend. If we get in short here, we get that hard close over the 13. We have our stop above. What are we looking at? Okay. The movement starts. Okay, here's a big one. Do you get out? Do you hold? Well, what's one of the things about the acceptance that I was talking about? You got to accept, once you're getting in, you're accepting. Okay? Especially if you're swinging. And don't forget, you know, a lot of the people that this is geared to are more towards the people that really they don't have time to check it every 15 minutes, every 20 minutes. Sometimes they might not an hour. So you have to be willing to go, you know what, all this stuff is lining up. Let me go short here. I'll come back later. I'll just check it. You have to accept that this is the ante that you're putting up. Yeah, someone's saying, yep, make a trade and go to bed. Exactly. And sometimes you wake up and you get stopped out. It's fine. Hey, Adriano. Good man. Look at that. Someone's taking a break from their vacation just to stop by and watch. Appreciate it, buddy. Options. What kind of market phase are we in, even though it's the H1, okay? Right, potential reset. We're in a downtrend, right? Okay, so potential reset at the quarter point because they love the resets at that trap volume to the left, plus we have the quarter point. They waited for they held, they dipped down, come back up. Cool, we get to break the blueberry. It's pretty strong, a pretty strong structure, but we still have the 50 above the 200. Okay, so this is where some confusion starts to lie. Is it still level 2? I mean, this was wide range swings. We know level 2 can look like level 3. But mainly I was looking for, we've gotten into the beginnings of what could potentially be range bound. Right, it's rattling. Exactly, Phil. It's rattling. So here's what I talk about. One second. See, I'm looking at questions. I shouldn't be looking at questions. Here's where I consider, okay, if this is a potential reset, the potential for it to actually come back down towards the first leg, right? That's no problem. I shouldn't be looking at the questions. Don't apologize. So I'm going to factor in this trap volume as well as the quarter point. Let's scrunch it up a bit. Okay, further, here's your actual low. Okay, if we go to the 4 hour, we take a look at the 4 hour, we can see actual low over here. So we have to factor that kind of stuff in. Why? Because, well, we know we're going to leave some on the table, but we want to at least have the most finely controlled and finely tuned exit strategies possible. Okay, so I'll draw this area out. No, I don't want to delete. Oops, sorry. Out, but I'm going to be factoring in this, and if it gives me some wonky behavior with the 513, then we'll take a look at it and see how we would handle it. So what I want to do is go through bar by bar and see what you guys think. Right here. Right, we're already in, we've already shorted, but what would we have been looking for right there? Okay, someone's saying don't flip bounce. Others, somebody's saying Friday, get out and wait for Monday. Now, see, what my thought process here is going into this day, I would have been looking for a nice hit up safety trade, back down, reset safety. Right. Someone else saying 50-50. Looking for it to hit the 50. Now, what I'm looking for here, as far as the actual question is, this is a good spot to get out. Also, over here was a good spot to get out. Part of the mental game is, again, trading around your position. Because this is a rattle, that's why I asked what kind of behavior are we in. This is a range-bound kind of market. It's in so much as we're on the H1. And some people have been like, wait a second, why are you talking about H1 range-bounds? Well, it's all fractal. But we have the rattler, as Phil said. So part of the mental game is alleviating the fear of giving it all back. So here would have been a fantastic place to get out. Maybe up here, as you see this pin back up here, and you're like, you know what, it's hitting that area. Let me close some out, hold into the next day. I'll look for my safety, heading back down. It doesn't really give it to you. Okay? Yes, going into Friday, you may want to consider. And this is why I'm doing this bar by bar, so we can discuss and you guys can walk through the process, and then, I can tell you the process that I might go through. Now, Friday, especially pound New Zealand, yes, I might very well cut this out. However, due to the nature of this wide 2-week M formation, going off that blueberry with all that stuff, that moving average tug on the blueberry for a reset is beautiful. Remember that. Okay, they pin, they hit the quarter point, cool. Let me scale out some more. the week. Now we are officially in here. So you got two options. Level 2 is beginning. What can level 2 do to you? What can level 2 do to you and do to the charts? What does level 2 sometimes behave like? Come on, I know you all know. Yes, Phil. Phil, you're making me very proud. Yeah, sideways, exactly like level 3. And that's where I believe that 23 trade came from, where the level 2 will come all the way back up into level 1, and then if it does the trap move there, then you're looking at a nice big fat move. But here's a perfect example of where between really trying to squeeze something out of the market and just going, all right, enough. All right, but if you just said I'm just going to stick to the 13.5 cross, then you're still in. But do you want to hold over the weekend on a pound New Zealand cross? I don't really like holding over the weekend on some of the Pacific pairs, but if you're this deep as well, I see no problem holding over the weekend if it's this deep away. If this was Friday and we closed here, get them again next week. Oh, where would my stop loss go over the weekend? I want to move it to the previous level, above the previous level. Going into level 2, and I'm going to talk about how to handling level 2. Going into level 2, I'll watch that behavior. If it starts to give me this 513 cross, that's when I'll look and I'll go, you know what? No, I'm out. Why? Because level 2 can come all the way back into level 1. Why am I going to get in here, hold down to here, and then watch it pull all the way back into level 1? Because we get those 23 trades where level 2, can whip all the way back into level 1, a lot of times I'll look to reevaluate in level 2 and then go, you know what? No, I'm just going to cut. Why? Because there's going to be another P formation next week or tomorrow on some other pair. Now, here's another conundrum, so to speak. You have two options. Just book at the quarter point because it turns out 430 pips is enough, or you try and push it. So let's get a vote. Do we push this or what? Do we wait for a 513 cross with divergence, or do we get out? We say, you know what, 2 quarter points is plenty. Jeff is saying cut. No, don't cut. Glenn says don't cut. Somebody says out. Others out, out. Okay, so let's see how we would handle this, factoring in the 513 cross as kind of a safe bet. Now we've closed at the extreme of the structure. Cut some and continue to look at the TDI. Tim, fantastic. Fantastic idea. Now there wasn't really much looking at the H1. Okay, down on the M15, you're going to be getting your ID 50s and stuff like that. So I'm not talking about that. There's ways to increase your position all throughout this on the M15, but just on the H1, looking for the visible stop punch, they were like, no, we're going. But that's a fantastic answer. Cut some, continue to look at the TDI. I just don't like that. So here, if I'm holding any more, now at this point, I don't like it. Me personally, and I will tell you, just from experience, I would have just been like, you know what, I'm done right there. You just had to sit through a couple extra hours. And again, you shouldn't be sitting through anything, but I just don't like that, personally, that shift back up. You know, someone's asking, would you be looking at dollar New Zealand? I will upon initially analyzing, but you see, the thing is, I have shot myself in the foot so much in the past by getting into a cross trade and then consistently looking at the majors. To a certain degree, this far into the trade, yes, I would, but I would caution against watching them all throughout this entire thing, because they will scare you out, especially when you're like, oh, my bias on pound New Zealand is this, but I don't know, New Zealand is looking like it could go down, so that means pound New Zealand's going to go up because pound looks like this, and it just starts screwing with you if you do it too much. Analyze it at first, sure, but for the most part, and this used to get me screwed up all the time, is the analysis of the majors, but you can. The reason I screwed up so much is I would ignore blatantly obvious stuff on the cross because I was overanalyzing the majors. So, okay, so let's see what it did. Let's see. What our final payout is for the 50 that I'm talking about. So this is the reason I'm showing you this is because it's this kind of bar by bar stuff that will make you reevaluate and go, you know what? I would have been better off just taking at the quarter point, letting some run, and then getting out on that hard shift. Okay. That's including. This is why I said the 3 disciplines. Factor everything in. What was one of the disciplines? Can anybody name me the 3 disciplines that I was talking about considering? Come on, bust them out. Bust those fingers out. Yeah, exactly, George. No, Kevin. I was talking about like the categories. Somebody are busting them in: mental, technical, and behavioral. That was the behavioral, again, is the price action. That could be some of the trickier aspect to it, because if you just resolve to accept your loss and not get scared out and not close your trade, but the behavioral, really seeing this, because this right here, this is a nice hard shift, but I didn't even close above the 13. How well, if you wait for your rules, if you do a close over the 13, you're not getting out until here. If you wait until the hard over the 50, there's no real divergence, okay? This isn't divergent with that. So this kind of example, this could illustrate to you, you know what, yeah, I don't want to have to deal with that, so I'm just going to book along the way, and at 2 quarter points, I'm just going to get out. But when you're in a solid trend, that might not be the best option. So this is why I'm talking about behavioral and really homeworking this stuff. You have to decide, because I get messages from a lot of people regarding like, oh, I closed over the 13 or it closed over the 13 and I got out because that's what the rules say, and then it went for all this. But what they forget is CAR will say close over the 13, get out, but if it does this other thing, get back in. But they don't get back in. Why? Lack of experience, lack of homeworking on the hard right edge. Yeah, this would be someone saying that's a half a Batman, right? Yeah, this would be like an H1 half the bat. Either way, it's exhibiting behavior that says, you know what, they made their trap. They might come back later, but they're not coming back now. And why not just get out? You got to think about the opportunity cost as well if you're trying to hold through all this, because gee, 5 days later it might drop another couple hundred pips. Because if it does, it's going to give you another signal as a reset, a continuation. Would you not be looking at the market baseline water and the TDI move towards the fixed 50? Well, yes, that's another factor, but don't forget, on a continuation, this will be where they reset a lot of times, at the fixed 50, at the water, at the fixed 50, a little bit above the fixed 50 while hitting the mayonnaise. So yes, looking at this, I'd be factoring in, well, they could come back into this area, that they could chop for 2 weeks, and wait till the mayonnaise gets down there. Don't forget this is a pound New Zealand. That's another thing to factor in. Pound New Zealand, they could hold right here for the next week. So personally, my favorite answer that one of you gave was, yeah, sure. Cut here and then just watch the TDI continue. You'd like to look at New Zealand dollar as well if it's possible. For this date, sure. Let's go take a look. All right, so we went on September 21st at that. Okay, cross down. That was September 15th. This is where this is happening. Oh, my goodness. This is why I don't like that. 1 second. Okay. To that. Right. Someone's saying 600 pips out. Exactly. That's what. See, last week I presented on the 513 cross because I'll explain to you something that was pretty cool that was told to me by Carr, and it was a while ago. It was last year, before I ever started doing any of the presentations, anything like that. It was when I was still really struggling, and I just wasn't seeing stuff. And we got talking. We got to talking. And he said, we were talking about the 13, the close over the 13, and he asked me in the fashion that he does, where he'll ask you to think about the answer instead of just giving it to you, and I'll present the same answer to you now, or the same question to you now. Why do you think he has the rule to close to get out of the trade if it closes over the 13? Someone said homework. Well, yeah, because he did a lot of homework and he realized that was a safe close. But what's really the reason? Someone said it's a good number. Somebody else is saying momentum. Well, the answer was, and it kind of made me go, oh, okay, yeah, that makes sense. The answer was, how else is he going to know when to close? Like, he wanted to give himself a reason to get out, because giving himself a reason to get out eliminated the garbage that we get ourselves into. Well, oh gee, it's coming back, but maybe it'll do this, and maybe I've seen other ones where it does this, and it eliminates that hard fast rule. He was trying to eliminate any way that he could get in his own way, and that seemed like a decent enough rule for him to close over the 13. There was a little phrase that I was going to say. I lost it. Right. Yeah. Someone said avoiding the hope it will come back. Oh, thank you. You just reminded me of the thought that popped into my head. Remember what I said before, that we tend to be fearful when we should be hopeful, and we tend to be hopeful when we should be fearful. Now, I'll look to get out on a close over the 13 if I'm taking at the peak and it just closes right back over the 13. That's where I'll handle that. But other times, see, here's where I'm glad you told me to go to the New Zealand. Okay, this is the move that started the pound New Zealand move was due to the pound dropping. Okay, so this was holding while the pound was dropping. But take a look over here. Let's say you get in here. Why would you be short? What's happening here that I talk about? You know, what are my setups that I like looking at? Well, yeah, it's peak. What about? It's like my favorite thing in the whole wide world, other than fluffy kittens.
And donuts. You forgot donuts.
And donuts. Thank you. Oh, you're there. It didn't even hit me. Oh, yeah, car's still there. Did I tell that story right? Did I get it right?
Yeah, you did. That was funny. Yeah.
Cool. Right, exactly. Everyone's saying baseline bounce with some baseline divergence starting. Right. This is such, and 2 to 3 days of divergence. The second leg gets put in with the baseline bounce occurring almost there. But I mean, look at that. This is so beautiful. This should be up on my fridge. Okay. Where could we possibly get out? Well, you're in everything. If you're going to hold until you use that 513 cross with the divergence, well, what do we get? We start to get actual divergence here, okay? And then it closes over the 13. We get that signal fire right in there. But here's the thing. Look at that. You just waited the entire weekend to get out where you could have over in this area as it closed near, gets near the end of the day on Friday. You just go, you know what? It's Friday. Again, it's going into level 2. This is a big drop. We're in level 1. This starts rolling over. We get into level 2 before the 50 even crosses the 200. So as much as I want to say, yeah, just do the 513 cross, it can be good, but you have to factor in the other stuff. Okay? Either way, this headed back up over the 50, and this is your level 2 behavior that you might want to avoid. But do you want to hold an extra 2 days for that extra 50? Maybe you do. Maybe you're looking at this and you're like, you know what, quarter point, Blueberry Crossing, that's one of those, the popular confluences that Doug likes. I'm just going to put it down there at the quarter point and wait till it hits it. And that's what you can do if you are booking along the way. If you're booking along the way, okay? You get out 50% at the mayonnaise and let this stuff ride, okay, cool. It's amazing how much booking and taking some off a little bit will alleviate your fear moving forward to just holding it. So, all right, we're actually up at the 50-minute mark. I had a couple more that I wanted to go over. I guess I'll have to do that next time, but are there any questions? So also, Gartley, there's a Gartley there. I guess you have that on your chart. You checked your chart. Apparently there's a harmonic there. Actually, you know what? I have I didn't do 2016. I'm sorry. So I don't have the harmonic that's there. But one thing I wanted to show you is, and a lot of people don't realize it, is first of all, on the multi-MA that most people have, I know a lot of people have taken it off, but if you want to use it strictly, put it back here by hitting the 5. You can also turn on the arrows. That's set to false because a lot of people are just like, I don't like the arrows. But if you want to use this for just eliminating the thought process, just eliminate the thought process, analyzing all that stuff that I talk about, and you want to use the 513 cross for that, you might as well turn on the arrows as well because that will, there's no second guessing. It's like, yes, it's over. That's when it crossed over. Going to add there. I think, you know what, one second. Let me list because there was an example. Remember what I said. What's the instance that I will avoid using the 13.5 with divergence? Anybody? I know, it was tucked away in the slides there. No. No. I said once I get the peak, once it's been anchored, and again, this is a completely different example of that thing that I like. Okay, that base it almost looks identical to that NU pattern. But here's the thing: if I'm in level 1, I kind of ignore it. When I take a look at the divergence is starting, this is just going flat. We've already dropped. All right. We get a crossover arrow right there. You see that. I'll ignore those basic rules when I have that peak locked. Why? Because I'm expecting this kind of behavior to begin in level 1 if they're going to give me a solid safety trade. And I like my safety trades to come back up above after the baseline has crossed the fixed 50 in the direction of the new market maker trend and the RSI is hitting back towards the fixed 50. I like that for my safety trades. So I will rebook some profit because it's next to the quarter point. Remember, as far as taking profit, I always do 5 to 10 in front of it plus the spread. You've booked. If I'm holding over the weekend, okay, this works out. Now we're starting to get into level 2. Now I'll pay attention to the crossover. Why? Because this might come all the way back up into this area. Okay, so we hit the blueberry. They've done this crossover. We've got a hard shift. The behavior is there. The technical is there with the blueberry. We have the trapped volume over here. All that stuff I consider, and I go, yeah, I'm done. Okay, so I just wanted to show this one last example. Sorry for going over about 3 minutes, but I wanted to show that one last example to drive home why in level 1 I'll ignore that 513 cross with the divergence, because it could be misleading if it's going into a solid safety trade setup. Right, Steven? Okay, so if there's no further questions, I'll cut it here. Thank you very much, Phil. Merry Christmas to you as well. And Phil's saying Merry Christmas there.
You can. I'll be there on Friday. I mean on Thursday. So.
Oh, that's right. That's right. Yes, everyone, stay tuned. Of course, we got 2 more days of DMR, so buckle up. All right, thank you, Adriana. Merry Christmas, everyone. Have a good night.
All right, thank you. Good night.
All right, good night.